Hi there, Serial Trader here. Just do a quick update on the major US indices as we basically immediately invalidated my little hypothesis from the weekend there. And we've gapped up, broken above the March 21st high, and closed near the highs of the day. So as far as this big picture outlook, I can remark we're still in this Elliott wave channel. So we could just continue trending higher here as long as we hold channel support, which we were certainly testing there last week a couple times, but it largely held, and now we've just gapped right back up again. And I'll also point out that yes, we've made new price highs, but there continues to be bearish divergence in RSI and also the MACD moving averages. So still making lower highs on those despite higher highs in price. But if we just keep going far enough, eventually these will just become overbought again and meet or exceed their previous highs, and then the divergence disappears. So that's certainly not a reason to sell, as has been proven so far. And as far as this goes, it still looks like we have a 5-wave sequence in progress, not complete anymore, as we've invalidated that possibility of being complete. So what are we doing? Well, this still looks like a 1-2. This is still a 3 by the looks of it, as it's the longest wave by far. This looks like a nice 4. So maybe our 5th is just continuing to subdivide and expand higher. I mean, this could just be 1, 2 of this 5th, and now we're going to get a 3, 4, 5 of 5, and maybe in the process meet or exceed those old all-time highs, although I still am not so certain about that. But certainly still pointed up here for the time being. Definitely no sell signals. Any sell signals that were there have been extinguished at this point. And with that, I'll go to the shorter term time frame. You can see this is what I was working just on the weekend there before today's trading. And I can get rid of all this because it's all been invalidated. We were in this channel near the top of the channel as of Friday's close, just blasted through that, gapped up, never looked back yet. So I'll delete all these shorter term labels. So this is quite I'll get to why this is a fairly unusual move at this point in the sequence. So, okay, we could be higher still in our 5th and doing a big extension here. So this could just be our initial 5 up for 1. This, I don't know how you get a 3 out of this. I guess you can just force it because you have to. This is your 2, and then we're going to do a 3, 4, 5 of 5. And let me just make sure this is 1 degree lower at least. There you go. And let me adjust this. So, I mean, eventually it'll find some sort of peak, but until it does, this thing is just on fire. And let me get rid of that line. Okay, so maybe we have 1 up of 5, 2 down of 5, currently in 3 of 5, and then we're going to need a 4 and a 5 of 5, and I don't really have any high confidence targets. Given our proximity to the previous all-time highs, certainly can't rule out a test or even a break of those levels. But as far as a trade goes, I mean, I don't know how you'd want to trade this. I suppose you could just go long here and put your stop below the most recent low, and that's at 27.85. But given that we're at 28.66 and the all-time high as a potential target is around 29.40 or so, not really a good risk-reward ratio. You're kind of in the middle of the range, kind of like a 1-to-1 give or take risk-reward. So from a trade aspect, I don't really find that appealing. But at the same time, it continues to be punishing to try and bet against this, and I certainly got stopped out for the 25-point loss on that one ES contract, and I won't be trying that again until, well, at least until I see a compelling reason to do so once again, which as of right now is not there. Now I want to bring something up before I go to the Thinkorswim candlestick chart, and it's exceedingly rare. So I mean, we have a gap up on the actual cash index, and those aren't that unusual, although they tend to get filled sooner or later. So that could be a setup possibly. If we get a gap fill and it finds some support, that could be a nice long entry for a continuation move up, although the gap so far is unfilled. But back to the futures chart here, it's exceedingly rare to see a gap on the futures go unfilled, okay? And you can see we went as high on the futures as of Friday's high at 28.40.75. Today's low is 28.44.50. So there's a clear gap on the futures chart, so far unfilled, although that will likely get filled, because I challenge you, go back, and you got to go really far back here on the continuation chart here on the futures to find a gap. Well, first of all, to find a gap, and then to find a gap that got filled. So I had to go back to April 2017 to find a futures gap, and you can see, yes, it continued trending up, and then we filled that gap, what looks to have been 2 or 3 weeks later, okay? So that gap got filled. It doesn't even look like we had a gap from what I can see here in 2018. Certainly nothing standing out there to me. And you have to keep going back further still to, well, here's a little gap down we had that was filled a few days later. That's in January of 2017. So there's that. And then over here we had this gap up in 2016. But that was filled quickly on that election night where it spiked down on Trump winning and then started rocketing back up immediately. So that gap got filled. So yeah, you don't tend to see these futures gaps too often, and they basically always get filled from what I can see here. So that is a potential thing to look for if you do want to get long and try and get a piece of this runaway train. On the gap fill, could be an opportunity. All right, with that being said, we'll go to the Thinkorswim candlestick chart. And yeah, so we had that bullish hammer candlestick on Friday there. Huge follow through, gap up today, closing near the high of the day, broke the March highs. 3 T-line riding well above the T-line. Starting to get a golden cross there, 50-day crossing above the 200-day. So certainly all the technicals are looking bullish at this point, and that shorter term Elliott wave setup has just been completely invalidated. Bit of a head scratcher there because it was looking pretty good, but you know, that's trading. So yeah, a move, you know, to challenge all-time highs just doesn't seem too far away at this point. But again, that gap fill could happen sooner than later. So before getting too aggressive, if you want to try and ride this, I would look for a gap fill personally. Although I'm not really looking to play this right now. There's again some individual names looking far more attractive for a trade setup. I just posted a interesting looking one there on the CGC and Weed. So if you want to check that out, it's available. Okay, and then yeah, certainly on the weekly, we've obviously already had confirmation of that weekly bullish engulfing candlestick from last week, as we got above the previous candlestick that it engulfed, and that invalidates that inverted bearish hammer by getting above that that top there, again the March 21st top. So everything daily and weekly looking pretty bullish here. Yeah, it's just running away. Okay, the Dow Jones Industrial Average. I'm just going to do this quickly here. I only really wanted to focus mostly on the SPX. Dow gapped up as well, also broke its... Dow finally actually confirmed the other two indices by making a new high where it had been diverging for quite a while, making lower highs. So that's certainly a check mark in the bullish camp. Dow now confirming the new highs. And that was breaking that previous high there from a fair while back. Let's see what date that was. That was February 25th, actually, was the Dow's high that it had to break. So it broke above that. That was at 26,241. Today got as high as 26,280. So the Dow certainly enforcing the bullish mood there. And the NASDAQ composite. Interesting, the NASDAQ composite so far is the relative laggard. And it's so far been unable to break its equivalent high there from March 21st. And that was at 78.50.11, although certainly, you know, one more reasonably up day and it'll do so, and that's probably going to happen here. So today got as high as 78.31.45. Big gap up here on the NASDAQ as well after that bullish hammer on Friday. So despite so far not quite confirming the new high on the S&P, it appears imminent. Okay, so that's the NASDAQ. And on the VIX, sorry there. On the VIX, we're making almost new lows. So we made a new low below Friday there, and we got as low as 13.32 on the VIX, although the previous low to hold is actually 12.37. So anything above that will be a slightly higher low on the VIX, although again, if the VIX is just in this subdued trading range, that's a fairly bullish condition for equities. Also got the 50 crossing below the 200 now on the VIX, and we're trading below both those averages, so VIX seems to be just going back to sleep, which is certainly a bullish condition for the indices. And just to quickly part here on the VIX VVIX tool, again below the red moving average on VVIX, well above the blue moving average on SPX. No real divergences forming here between VIX and VVIX. So this is certainly in a bullish mode at the moment. No sell signals developing as of right now. All right, that should be good for now. Serial Trader signing off.